Forex market trends, where institutional logic meets the charts. Think you understand trends? You're probably seeing only the surface move. The real force, the multi-billion-dollar engine that builds and sustains every major trend, operates in the shadows of order books and interbank flows. Retail traders chase the trend. Institutions are the trend. Today, we deconstruct the blueprint. Forget the simplistic lines on your chart for a moment. An institutional trend is not a line. It's a calculated accumulation and distribution campaign executed across the global liquidity pool. The process isn't emotional, it's logistical. It begins not with a breakout, but with intent at key value areas, major support, confluences, or high-volume nodes identified long before price arrives. Here, the goal isn't to spike the market, but to absorb sell-side liquidity efficiently. You'll see this as a consolidation, a basing pattern, or a deliberate slow grind that seems to absorb every sell order without explosive momentum. This is the footprint of accumulation, building a core position so large it cannot be entered at a single price. The trend hasn't even begun for the public yet, but its foundation is being laid block by block, often shaking out weak hands with false breaks and volatility compression. Once the core long position is established, the institution's objective shifts to fostering an environment where price discovery moves in their favor. This is the trend propagation phase. They achieve this by strategically providing liquidity on pullbacks, stepping into buy where retail sentiment turns fearful, and by selectively leaning on offers to nudge price higher, creating a series of higher highs and higher lows that the retail crowd finally identifies as a trend. The retail influx, seeing the confirmed momentum, then provides the fuel, the follow-on buying, that allows the institution to begin distributing their position near the peak of euphoria. The final phase is distribution, the mirror of accumulation, where the institution sells their inventory into rampant retail demand, again over time, often at the peak of a parabolic move when trend following is most consensus. The trend reversal isn't a sudden event, it's the completion of a massive transfer of risk from smart money to latecomers. For the expert trader, the task is to read these phases, identify the absorption at value, ride the propagation, and recognize the distribution churn, not by drawing a better line, but by analyzing volume profiles, market depth shifts, and the nuanced price action at liquidity pools that reveal this institutional machinery at work. If this breakdown shifted your perspective, your analysis needs to go deeper. Smash that like button, it fuels our research. Subscribe and hit the bell to ensure you're aligned with the next strategic breakdown. The market moves on logic, not luck. What's your most reliable tell for institutional accumulation? Debate it in the comments below. Let's filter signal from noise together. Until next time, trade the structure, not the story.